Welcome to the Technests channel. If you are new to prop trading, welcome. If you are already funded and trying to stay funded, welcome too. Today we are talking about something most traders never build on purpose. A real operating doctrine for prop trading. Most trading companies build tools. A charting tool, a signal tool, sometimes a bot that promises smarter entries and exits. Tools can be useful, but tools alone do not keep a trader funded. Tools alone do not stop revenge trading. Tools alone do not protect payout cycles. Tools alone do not prevent quiet rule breaks that destroy accounts. Technests was never built as just another tool company. Under Dr. Markets and TradeRx sits something deeper. A prop trading operating doctrine. When I say doctrine, I mean an operating playbook. Non-negotiable principles. Clear rules, repeatable behavior. A way to design, execute, and manage trading every day. This matters because most prop traders do not fail from lack of strategy. They fail from lack of structure. Technests does not only give traders bots. Technests gives traders a way to operate. Before we go deeper, here is a quick financial disclosure. This video is for education only. It is not financial advice. U.S. futures trading is risky. You can lose money. Prop firm rules vary by firm. You must follow your firm rules exactly. Only trade with money you can afford to lose. Now, let us build the context. Prop trading does not fail at the chart level. It fails at the behavior level. Without a doctrine, most traders fall back on instinct. They trade based on emotion. They improvise day by day. That path often leads straight to resets. Fear destroys plans. Fear makes traders cut winners early. Greed destroys plans. Greed makes traders hold losers too long. Tilt destroys plans. Tilt turns one red trade into a red week. Then there is rule bending. A trader says they will not trade during major news. Then they see a clean chart and they break their own rule. A trader says they hit the daily loss limit. Then they take one more trade because it feels too good to skip. That is not a strategy problem. That is a behavior problem. And then there is chaos. No 2 days follow the same structure. Trade size changes with mood. Risk is not tracked the same way each day. Nothing compounds. Prop firms are not looking for clever improvisers. They want operators. Traders who behave predictably. Traders who respect rules. Traders who protect capital. A doctrine creates that behavior on purpose. Now let us talk about the core of the Technests operating doctrine. It rests on 3 pillars. These pillars apply to every futures prop trader using Technests. The first pillar is constraint before creativity. Dr. Markets does not start by asking what is the best trade. It starts by asking what is allowed today. That single shift changes everything. Before any plan is built, Dr. Markets checks your boundaries. It checks how close the account is to drawdown. It checks daily loss limits. It checks maximum risk parameters. It checks if major events are near. It checks the Consumer Price Index report. It checks Federal Open Market Committee days. It checks the United States Jobs Report. It checks firm-specific event bans. It checks allowed trading windows. It checks cutoff times. It checks payout constraints. Only after constraints are satisfied does planning begin. Creativity is allowed, but only inside the boundaries. There is no setup so good that it justifies breaking the structure. The second pillar is automation over emotion. TradeRx exists for one reason: to remove the most dangerous variable in prop trading. Human impulse at the moment of execution. TradeRx does not hesitate when a valid plan is active. TradeRx does not chase after a missed entry. TradeRx does not increase size because someone feels confident. TradeRx does not trade during restricted windows, even if the chart looks perfect. Automation is not about being clever. Automation is about doing the plan exactly as written, especially when a trader is tempted to ignore it. The third pillar is structure over strategy. Technests is not built on the fantasy that traders can predict every move. The doctrine assumes something more realistic. Strategies will be wrong sometimes. Markets will shift. News will shock price. The edge is not prediction. The edge is survival, not guessing games. The main objective is simple. Stay inside the rulebook long enough to pass evaluations. Stay inside the rulebook long enough to collect payouts again and again. Strategies can change. Structure stays. Now let us talk about how this doctrine shows up day to day. Because a doctrine is useless if it does not appear in daily operations. At Technests, every trading day follows the same backbone. The day starts with preparation, not trading. Preparation. Before any E-mini S&P 500 futures trade is allowed, the day is framed. Before any E-mini NASDAQ 100 futures trade is allowed, the day is framed. Before any gold futures trade is allowed, the day is framed. Rules and calendars are loaded. Prop firm rule files are loaded. Trading windows are confirmed. Event lists are reviewed. Consumer Price Index Day, Federal Open Market Committee Day, United States Jobs Report Day, and also any firm-specific restrictions. Then balances and drawdowns are checked. Evaluation accounts are checked. Funded accounts are checked. Accounts close to drawdown are flagged. Some accounts may be paused. Not because the chart looks scary, because the risk is tight. Then cutoff times are calculated. No new trades near the end of the allowed window. Late session risk is controlled by design. Nothing is guessed. The day is framed before opportunity is considered. After preparation comes planning. This is where Dr. Markets builds the plan. Once constraints are in place, Dr. Markets generates trade plans. Plans for E-mini S and P 500 futures. Plans for E-mini NASDAQ 100 futures. Plans for gold futures. Stop loss is sized to account rules and current volatility. Take profit is aligned with firm constraints and account goals. Trade times are spaced across accounts. This avoids identical behavior across many accounts at the same moment. Event avoidance rules are embedded directly into the plan. Cutoff rules are embedded directly into the plan. Dr. Markets does not try to outsmart the market. It builds tight plans that can survive typical prop firm conditions. Then, execution begins. This is where TradeRx enforces the doctrine. When it is time to trade, TradeRx becomes the enforcer. No trade is allowed without passing balance checks. No trade is allowed without passing rule checks. No trade is placed during restricted event windows. Daily loss caps are enforced automatically. Trade caps are enforced automatically. If a trader tries to push past limits, the system blocks it. If a trader tries to size up without permission, the system blocks it. If a trader tries to add extra trades, the system blocks it. And every action is captured as part of the record. Every trade is recorded. Every trade attempt is recorded. Entry time, exit time, instrument and direction, balance before, balance after, status tags that make the account state clear, pass, hit max drawdown, may qualify for payout. This is not just an idea. It is enforced through execution. Then comes feedback. This is where the doctrine becomes a habit. At the end of the session, traders review more than just filled trades. They review what was blocked, too. They ask a simple question. How many times did emotion try to push past rules today? Were there repeated attempts during major events? Did the system save the account from unnecessary risk? This feedback loop is where the doctrine shifts. From software behavior to trader identity. Now let us bring this to real life. Let us talk about 3 futures prop traders. Same markets, different problems, same doctrine. First is an E-mini S and P 500 futures trader. This trader came from a discretionary background. They understood price action, but they kept violating daily loss limits. Under the doctrine, the system refused to keep playing that game. Dr. Markets refused to plan new trades once loss caps were hit. TradeRx blocked extra attempts and captured the reasons. The trader could finally see the pattern clearly. Not in their head, into the records. They passed an evaluation not by finding a new setup. They passed by respecting constraint. Second is an E-mini NASDAQ 100 futures trader. This trader struggled with hesitation. They saw valid setups. They second-guessed the entry. They missed the trade. Then they chased the move. That is a brutal cycle in prop trading. Once they committed to the doctrine, things changed. Dr. Markets defined clear risk and timing. TradeRx executed when the criteria were met. The traders stopped trying to click at the perfect second. They focused on review and improvement. 2 payouts followed in a short period. The difference was not more intelligence. It was less emotional interference. Third is a gold futures trader. This trader was good at being right. Directional calls were often accurate, but resets kept wiping progress. The doctrine forced a different focus. Stop loss and take profit were fixed by rules, not mood. Trade caps limited how many chances they could take. The goal shifted, not to be right on every move, but to protect the account and stack payouts. Within a couple of months, multiple payouts came in a row. Structure turned prediction into a business. Now step back for a moment. A single disciplined trader is useful, but a shared doctrine is powerful. In a community, a shared doctrine means everyone operates on the same principles. Records can be compared in a meaningful way. Accountability becomes objective, not personal. For prop firms, doctrine-driven traders are more stable. Rule breaches drop. Risk exposure becomes more predictable. And for the industry, something bigger happens. The culture shifts from gambling to operating. Serious traders start thinking like process managers, not chart gamblers. That is important because the Technests' long-term vision is large. 1 million automated traders by the year 2030. That only works if doctrine spreads, not just software. Now let us talk about the psychology shift that makes this possible. Most traders enter prop trading with a dangerous belief. They believe freedom is power. Freedom to override rules. Freedom to size up. Freedom to chase. Freedom to break the plan just this once. The doctrine flips that thinking. In a prop environment, freedom is often failure. Constraint enables consistency. Structure enables survival and scaling. Intuition is not banned. It is moved to the design phase. Before the session starts, execution belongs to the system. That is how traders stop acting like gamblers. That is how traders start acting like operators. Now let us address common questions traders ask. Is this too rigid? Prop firms are rigid. Their rules leave no room for improvisation once you cross the line. The doctrine matches that reality. Inside those constraints, there is still room for strategy choice. There is still room for timing windows. There is still room for portfolio design. What if my personal strategy does not fit? Your strategy can sit inside the doctrine, but it must respect constraints around risk, events, and trade frequency. If a strategy only works when rules are ignored, it does not fit prop trading. Is this just another risk framework? A framework is optional. A doctrine is how the system runs. At Technests, it is not a suggestion. It is the operating standard. Does this kill intuition? No. Intuition belongs in planning, market selection, and system improvement. It does not belong mid-session, deciding whether to break rules. The doctrine protects you from the worst version of your own intuition. Can beginners adopt this quickly? Yes. Beginners often perform better because they never build the bad habits. They build structure first. And structure is what keeps an account alive. Now, let us wrap this up in plain language. Tools alone do not save traders. Ideas alone do not survive markets. What endures is doctrine. Principles and rules executed the same way every day. Across accounts. Across instruments. across traders. Technests is not just shipping bots. It is enforcing a way of trading. Constraint before creativity. Automation over emotion. Structure over strategy. That is why traders survive longer. That is why prop firms can trust the behavior. That is why payouts start to look like paychecks instead of lucky spikes. The doctrine is not a slogan. It is the Technests prop trading operating doctrine. If you are still treating prop trading as an arena for instinct and improvisation, you are playing the wrong game. United States futures prop trading rewards operators, not gamblers. With Dr. Markets designing structured plans and TradeRx enforcing them, you can trade under doctrine. You can stop hoping discipline shows up. You can build discipline into the system. Thank you for spending time with Technests today. If this message hit home, come back for the next video. Next time, we will break doctrine into a simple daily routine you can follow step by step. And if you want to explore the full Technests ecosystem, visit technests.ai. One more quick reminder before you go. This video is for education only. It is not financial advice. United States futures trading is risky, and you can lose money. Always follow your prop firm rules and manage risk. Thank you for watching this episode on the Technests Prop Trading Operating Doctrine. If it helped you think more like an operator and less like a gambler, make sure to subscribe to the Technests channel so you do not miss the next video. And if you want to explore the full Technests ecosystem, visit technests.ai.